Strandberg. He is the CEO at Enterprise Development Corporation. He heads up the EDC of South Florida, a nonprofit entrepreneurial support organization that's focused on early-stage science and technology companies. He leverages a large network in South Florida to provide startup companies with the tools they need to grow and succeed. He's also been instrumental in the launch of several incubators at FAU Research Park, Broward College, and the Miami Entrepreneur Center. He's also an avid golfer, and he has 3 kids in their 20s, and one of them, he says, is a VC, but is not an angel. So, here's Rob.
Thank you, Cindy. Let me just, how many of you have ever heard of the Enterprise Development Corporation? We're sort of a under-the-radar entity here in these 3 counties, Palm Beach, Broward, and Miami-Dade, that see hundreds of business plans, startups, and entrepreneurs every year. We actually provide a lot of deep support to startup teams, and we've helped a lot of them get financed. So as you guys get going, don't forget to come visit us at EDC. We deal a lot with angels. I'll probably, I'm supposed to provide some war stories, so I'll get to that. But there are a lot of great angel groups within Florida. We deal with them all. I do the scoring and the downside for New World. And New World probably sees any interesting startup in the state of Florida. So we at EDC have a very good idea of what angels are looking for, issues of valuation, exactly what the factors are that are important for an investor to make it interesting for an investor. We also work with Miami Innovation Fund. I think Frank Matic was here. He spoke. He was one of the speakers. He and Steve Rapetti are members of Miami Innovation Fund. Work with a couple of members of Accelerate Growth Partners. So there are a lot of angels, and I won't waste your time yet. Just some of the best material I've ever seen presented on financing, so I won't go through that. But let me focus on some of my experience. I've probably throughout my career raised over $1 billion of financing. I've raised about every tranche of the balance sheet. Private equity, private debt, public equity. I've run some public companies, been a director of some public tech companies, and sort of seen it all, done it all. And candidly, failed more times than I succeeded. So I think I'm a unique advisor to startups. So I know probably more about what you shouldn't do when you start to raise money or grow a company than what you should do. It's been a long and interesting process. So I'm an engineer by training. I graduated from engineering, and that was the last of the real use of my engineering degree. I went to Boston, worked for a spin-out of Bain Capital for a couple of years back in the early 80s. Went back to business school. Left business school and decided that I really wanted to start a company. But I was young, and I wasn't going to be taken seriously unless I had a couple different areas of deeper knowledge. So what I did was I joined a company called General Instrument. It was a large billion-dollar technology conglomerate. Actually, some of those executives, Ed Breen is CEO at Tyco down here. David Robinson, a good friend of mine, was one of his lieutenants for years. But General Instrument was a sort of a baptism by fire. And what I did, I threw myself into a very intensive couple of years of being a financial analyst. And all of a sudden I came out and I understood a balance sheet, income statement, cash flow. I understood how large corporations look at their divisions and the product lines to figure out which are investable and so on. But that experience, I was sort of a staff guy, which I wanted to be a line manager, get out and run my own company. And so I joined a company called G-Tech. G-Tech is the world's largest supplier of online lottery systems. It was, at that time, a startup, effectively a startup. major card, and if it's $100 million or $200 million, $500 million pot, that background system is candidly what they should have used for Obamacare. You know, if those lottery terminals go down or that system goes down, the liquidated damages are in the millions of dollars a day. So that sort of was my first taste of a technology company that was in its early growth cycle that was really focused on almost flawless execution. Within G-Tech, they had a small engineering team down in Orlando, and they couldn't convince these guys to move up north where G-Tech was. So still in the 20s, I went to work for the CEO. I said, I'd like to do management buyout of this engineering firm in Orlando. And my boss, who was quite the character, proceeded, F this, F that, Rob, you can't buy this group down in Orlando. Well, I met the engineers. I grabbed two of the key engineers, and the three of us formalized a bid to Donaldson, Lufkin, Jeanette, which was managing G-Tech was a public company at the time, and figured, what the hell? We're young, we're stupid, might as well give it a try. And ultimately, we were successful. I learned a major lesson, which I think is very relevant to a lot of what you guys are doing here. We were able to raise funding, not because of me, but my two partners were off the charts strong engineers. Bob Willers and Bill Hartman had invented technology in a lot of industries. So I went out and raised money from some very, very famous investors. I don't know if any of you have ever heard of Richard Rainwater. He's been on the cover of Fortune, and he made Bass Brothers. Took $30 million from Bass Brothers in California, turned it into $30 billion. Rainwater was quite the successful entrepreneur and investor. So we raised a little tranche of $5 million, did this management buyout. Again, not because of me, but the guys that I picked that I knew were financial. And we grew that company. The company was called Datamax, to about $200 million in about 8 years. And through that growth, we did some M&A. We raised some money with some very famous private equity guys. And the company was ultimately sold for hundreds of millions of dollars. I left early. Again, I was young, stupid, emotional. My shareholders, there was a point made about losing control of your company. I lost control of Datamax. All of a sudden, I had guys sitting across the table. If you've ever seen the movie Barbarians at the Gate, well, the guy they highlight his boss was my shareholder, a guy named Peter Bennett, who founded Merrill Lynch Interfunding. And Peter was a butthead. We were incredibly successful, but he was bound and determined to wrestle this company away from the three founders, Bill Bob. So anyways, I went on to run a public company in upstate New York. It was, I think, about a $400 million technology company. I learned a lot about public equity. It was sort of a turnaround. That's why I was recruited. And came back from Rochester. My kids had grown up in Orlando. I had been the director of a company called Sawtech, which had we designed the surface acoustical wave technology, the RF filters for cellular handsets. And the CEO had made an awful lot of money at Strandberg, and I was a director, and he retired, and convinced me to spin some technology out of Lockheed Martin back in Orlando. So I left. PSC was the public company, come back, and we created Sidetrans, which was a spin out of some millimeter wave technology from Lockheed Martin. Very, very high tech. We did point-to-point radios, transceivers that could send gigabits, avoid running fiber optics between cell towers. We could bounce up and back off the satellites, and we ultimately designed the technology you see at the airport, which is called radiometer, which can actually see under your clothes. Actually, can see everything under your clothes, which is a story in and of itself. That when 9/11 hit, initially with angels. There were both some individual and a group of angels, but primarily venture capitalists. We grew, we raised a total of, I think, about 25, 26 million. It was, so we really didn't have an early seed round. We went right to effectively a Series A, B, C, and D. And actually, for all of the terrible things that are said about VCs, we actually had a very good relationship. We were doing well. We were exceeding expectations, and it was very, very interesting. Long story short, I took some time off, sort of retired, came down here to run EDC. But through my career, the most important thing I learned early on, which I think is important for all of you, is that investors, whether they're angels or VCs, really invest in people. I mean, there was a comment that the most important thing is how are they going to make their money. But what I've learned is they have a much higher level of confidence if they think they're investing in a team that is particularly strong. And that can define all sorts of elements. If you're trying to do a technology startup, I think there's a group here that's doing surface acoustical wave.
RFID.
I was the director of SawTech. SawTech was run by some of the first technologists in saw filters. And Steve Miller, the founder of SawTech, was the guy that recruited me to run SiteTrans. If you could get a Steve Miller on your board, even your board of advisors, because the most important thing investors want to see is there's some sort of independent read by somebody who knows what they're doing, that what you have is special. So when you think about building a team, there was a lot of discussion about dilution, a lot of discussion about the most important things at VCs. If you can't convince some sort of world-class advisors, ideally some world-class people to join the team, that you have something special, then there's something wrong. If you think you're going to penetrate a large market with something you think is breakthrough, and you can't get any participants in that market to join your team, you should harass them and say, why didn't, what is it? We think we've got a solution for this space. Why don't you want to join our team? And it's the guys that have been embedded in the industries will give you the best advice of what you need to do to be special in your target industry. And when the VCs or the angels see these guys jumping on board, if they become executives, committing their career, or in investors who know what they're doing in that space, I can guarantee raising money isn't nearly as challenging as you might think. If you can get strong strategic advisors or space-literate advisors or investors in moving forward with your company, VCs, all angels, all types of investors will look up and take notice and assume there's something special. So it all comes down to building a management team, ideally of some very strong people, like I did. I was the weak link in the chain for a long time. I had two brilliant technologists, so they were investing in them. Ultimately, I had enough of a resume, so some of the VCs were investing in me, but it took me years and years to develop my own credibility. But find team members, and adding to your team is dilutive, but it's necessary, and it creates order magnitudes, more easier challenges when you're raising money. If you can say, we've got this guy who's the expert in our space, who's spending time and effort, who comes down monthly or quarterly, or is our paid advisor or our CTO, investors will line up if you have a management team that is highly credible. That's the biggest challenge we see at EDC with startups. It's a single entrepreneur who's never done it or been there. Maybe they have a great idea. It's tough to convince an investor that somebody who hasn't been there, done that, is investable. If he or she brings on some strength, someone who's had a serial entrepreneur with some exits, ideally somebody who understands the technology, it becomes far easier to raise money. So with that, I'll open it up to questions. Any questions about raising money or issues with raising money? Or
Rob, a little different question to that, and you now in charge of EDC. Can you do a quick synopsis of the genesis where EDC is present and where it's going in the future?
okay, EDC's always been in business for 16 years. Actually, you're all invited to our 16th Emerging Technology Business Showcase. Our afternoon session conflicts with your afternoon session here, but it'd be great if you guys would come and see 16 presenting companies, and then there'll probably be twice as many companies in booths. So you'll see sort of, and in some instances, these are startups that are raising some pretty good money. Last year's class, there was a handful, I think in the last count, they raised probably $3-4 million in various pieces. But EDC has always been a nonprofit. We've received our funding historically from grants. When I jumped in about 1.5 years ago, the board was concerned because the grant income was declining dramatically. My predecessor, JT, was joining the Institute, which has been mentioned here. And what I've tried to do is really change how we do our job. When we sit down with entrepreneurs, we do a very customized approach to mentoring. So that's one big change. I spend a lot of time in the first meetings with startups. I've seen almost every sort of twist and turn of an idea in technology. I'm not a bioscience person, I stay away from that stuff, but if it's not bioscience, chances are, I can start to put together what I think the team needs to do. And so we spend a lot of time and then I bring in mentors. There was a comment by the previous speaker, which was a fantastic comment. We try to get experts, like, I'll bring in a finance guy, I'll bring in a building management team guy, I'll bring in some sort of person that if it's a medical product, I'll bring, he's too old now, but a Bill Allen from Walshall to sit down and talk to the team and sort of qualify it. So we take a very customized mentoring approach. There's no timeline. Everybody, there's a lot of incubators. I'm new to this whole incubation industry that's gone so crazy recently. We don't have a timeline. I don't think any startup should be given 2 years or you're out. A good example is Andreas down in Miami. Open English, it took Andreas and his wife probably 3 or 4 years. They couldn't raise any interest from investors. In the last 2 years, Andreas has raised over $100 million of venture capital. So it took him all sorts of times to take off. So back to the question, what does EDC do different now? We don't give our startups a timeline. We're not in the business of managing the day-to-day of our startups. So we work with, right now there's probably about 2 to 3 dozen that we're working with pretty intensively. But it's a different approach. There's not a lot of chapters written on how we help various types of our companies. So again, I don't know if I answered the question. It depends on the company, how long we spend, how deep we go. We have some very successful companies run by serial entrepreneurs, and about all I do with them is help them make introductions to some VCs or angels. And then we got companies with great ideas that need sort of ground zero support. So we dig into everything, a lot of which has probably been covered in this curriculum. So we do a deep dive or a very shallow dive, and we try not to turn down any promising entrepreneur. And we're very honest. We'll tell you what you need to hear. So that's what we do. Thanks.
We have another question.
Yeah, hi, Samuel Levy. Can you talk a little bit about...
Hold on, it's not working. Sorry.
Sorry, Samuel Levy. Can you talk a little bit about, for those folks, and there are many, especially here in this room, who may not have an extensive network when it comes to resources like the ones that you talked about tapping into and making part of your team, right? Senior level executives, very skilled technology resources. It sounds like you had a good network, but many people here do not, but may have a great idea. Similarly, with regard to finding possible investors. So what would you say to the folks that don't have as evolved a network about going about getting the pieces that you need to succeed?
Well, first of all, EDC will help make connections. So you can always come to us and we'll spend time to understand the startup and figure out what network we can tap in to help you. The other thing that I think is misunderstood, which is the value of just getting out and pitching your company and going to networking events. A lot of entrepreneurs complain, there's no investors in the room. But probably more important, there's people who know people that can help you. So you can start to build your own network. You can start to put and cold call. If you're in a deep science, Google who's in what. If you're pulling together a business plan and there are competitors out there or there are other participants, just get on the phone, call that expert in, cloud security or high frequency wireless, or try to ask around, try to figure out who would be an interesting person, because the first conversation could be simply just their advice. We're doing this, help us vet the idea. Are we on target? Is it special? But a lot of it is, just knocking on doors, just like I was told you should need to do with investors. But try to find some advisors and don't jump too early in saying we want you to be on our team. You want them to prove to you that they can contribute to your team. I see a lot of times, particularly a lot of our companies, sort of all these guys pile on as advisors. An entrepreneur has only so many hours a day. That team needs to be well constructed. There's got to be all sorts of aspects of it that take time to build, but don't be too quick to build a team. Find the best guys. And we can help you network.
Okay, excellent. Thank you very much. That was